Hi, and welcome to today's episode of the Property Pod. Today I'm joined by Gemma and Emma from Gemstone Mortgages. Welcome to the podcast, guys. Thanks for coming on.
Thanks for having us.
And tell us a bit about Gemstone then.
Well, we are a friendly team of mortgage brokers. We're based in Colchester, but we cover the whole of the UK, arranging mortgages for first-time buyers, home movers, if you're looking to upsize. We do remortgages, buy-to-let investors, and we're just really passionate about giving the right advice, really, and doing the right things for our clients.
Yeah. And you're all female team, I think, as well.
We are, bar one. We've got have one boy, Tyler, who works with us on a Saturday. But otherwise, yes, we are a female strong team.
Very cool, yeah. Great. And what factors do you think are important in determining what you can borrow as a second-time buyer?
Oh, I think it all starts really with how much your property is worth, because obviously you need to probably sell a property before you can buy your next one. Yeah. So the first step is probably going to be to get your property valued and know what it's worth, because then we can determine how much equity we've got in the property to be able to use for your deposit. We know a number of estate agents that we work with, so we always normally point our clients in the right direction for that. But then once we know what they can actually put down as a deposit, we can then look at their affordability, which ultimately that's what it all comes down to. So how much do they earn, what do they have outgoing, and then just working out what they can afford to borrow on a mortgage.
Yeah, just being practical, I suppose. And
Also about factoring in some moving costs, because a lot of home movers don't think about the cost of moving, and solicitors' fees, estate agency fees, stamp duty, which they may not have paid on their first purchase. So it's factoring those things in as well.
Yeah, definitely. Oh, okay, great. And what does a second-time buyer need to be able to qualify for a higher mortgage, do you think?
Well, I think most people would like to think that their property's gone up in value since buying their first property. Normally that will give them a bigger deposit. But again, it's just about affordability. They need to be earning the right amount of money to warrant going the next step and being able to borrow it. We always make sure that we do like an extensive budget plan with them, so they know what the extra money is going to be for their higher bills, maybe if they're moving to a bigger property, bigger mortgage prices. Just factoring all of that in and just making sure that they're aware that they've got to step up really and pay a little bit more each month.
Oh, definitely. And what do you think is the best type of mortgage for second-time buyers to get?
I don't think you can really answer that question, because no two clients are the same. So everyone's needs are different. It depends on their individual plans and future plans and priorities. So I wouldn't say there's a best type of mortgage for a home mover or a purchaser.
No, you've got fixed rates, tracker rates, variable rates. Do you want a 2-year, a 3-year, a 5-year? But like Emma said, it's just it's actually finding out what is for that client, what's their preferences, what's their needs, and building something that's bespoke for them, really.
Yeah. I suppose you can't pinpoint it down to one thing, because it's just that everyone's needs are different.
Absolutely,
and all this different stuff they have to factor in.
That's why it's really important to get advice, rather than trying to make the decision yourself without knowing really what's out there. It's getting advice from a professional that can then take down your needs and then actually advise you something that's the right thing for you.
And a lot of lenders now don't necessarily advise you. They can inform you of what's available from their bank, but it's not really advising you on what's right for your individual circumstances. So that's really important.
Yeah, definitely. And if you're buying a freehold or a leasehold property, which type of mortgage do you think is best for a second-time buyer? I know we sort of just said, it's not really one.
Again, there's no kind of different products for a freehold or a leasehold. But what we would need to do is just factor in the costs of a leasehold property, because you've got your ground rent and your service charges usually, and that can then have an impact on how much you can actually borrow. The main difference really is going to be with your solicitors. The solicitors have to do a lot more work with a leasehold property, so it might be a little bit more costly for you, so we need to factor that in as well. But it doesn't necessarily mean that it's a different type of mortgage. It's just factoring the cost of the leasehold in to ensure that it still fits on affordability. And
do you think that Covid-19 and Brexit has had an impact on mortgage rates?
I think we've seen so much like up and down, haven't we, over the last like 12 months especially. I mean, when we all first went into lockdown, we had no access to like 90% or 95% loan to value mortgages.
Yeah.
And when we did get them, they came on the market and they went straight away because the demand for them was so high. Yeah. And interest rates were actually quite high as well, weren't they?
Significantly rose, yeah. I think there was so much uncertainty in the market, what was going to happen with the economy. The rates did increase, and like Gemma said, high loan to value mortgages just were withdrawn from the market altogether at one point. But then we've had other schemes.
Stamp duty holiday.
The stamp duty holiday.
Oh, yeah.
Yeah, that obviously boosted the market massively. And then the demand was there, and lenders felt more comfortable. I think once the furlough scheme was kind of established and there was kind of grants and everything put in place to ensure people's income was more stable, lenders then felt more relaxed to be able to lend. So they dropped their prices. And we've seen some fantastic rates.
Yeah.
I mean, I'm quite sad and I get excited about interest rates. But we've seen some fantastic rates as like lower than 1%, and we haven't seen that for years. But we have recently been then told, obviously with the cost of living going up, inflation, and we've been told by some of our lenders to let us know that they will potentially be putting their rates up in the next few months. So now is the time to secure a rate if you can, basically.
Yeah, do it now. Because I suppose it all affects everything, doesn't it? Everything is just inflated by everything.
Higher the rate, the higher your mortgage payments.
Bank of England base rate's going to go up at some point, and I think the money it costs banks to buy in and sell their money has increased in the last couple of weeks. So it's imminent. We feel that rates will go up, which is why it's really important if your rate's coming to an end now to review it.
Yeah, definitely. Okay. And what are the pros and cons for a second-time buyer buying a new build property, do you think?
I think this has changed actually a little bit because they've now withdrawn Help to Buy for second-time purchasers. So Help to Buy was a great scheme that really did help a lot of people, but now it's only available to first-time buyers. So as a second-time buyer, you're going to need a bigger deposit. So with houses, you're going to need 10 to 20% deposit to buy a new build house. Flat sometimes it can be a lot harder to get a new build flat. However, there has been a new scheme that's been brought in by just a few lenders that are allowing second-time buyers to purchase with a 5% deposit. I think we've seen about 3 lenders so far coming in with that. So it is becoming a little bit easier.
Yeah, that's really interesting as well. 5%, 5% on a house.
5% deposit, yeah.
Get me a house. That's what I need right now. Wow, that's amazing. That's really cool. And can people buy a second property with a residential mortgage, do you know?
It depends on the circumstance. So if you've got a need, if you've already got your own home and you want to buy a second residential home, maybe a holiday home, or if you work maybe further away and you want somewhere to stay while you're working, or maybe for a dependent relative to live in, then yes, that is doable. But you have to be able to afford both properties. So a lender's going to establish that you can afford to pay 2 households worth of bills, mortgages, and everything. So it's not just it's just not just that mortgage, it's both of them that you're going to need to afford. Or if you were buying a buy-to-let, if it wasn't going to be as a second residential, then you can do that as long as you've got a big enough deposit.
Okay, great. And can a second-time buyer apply for more than one mortgage at a time? Like, how can they do that? Is there a best way? Would it affect their credit score?
It probably depends on the circumstances. But yes, like Gemma said, some people might be buying a buy-to-let and you might be remortgaging your residential at the same time as buying that buy-to-let, and you might have 2 mortgages run alongside each other. That's completely normal. You wouldn't want to have too many applications running at the same time unnecessarily, but in some situations, absolutely, it makes sense to have more than one running at the same time.
And which options are available to repay your mortgage early, and which ones are the best?
It depends on the mortgage that you've got. The majority of people are usually in like a fixed rate. So during that fixed period, there will be early repayment charges if they would repay the mortgage in full. Most lenders do allow you to do a 10% overpayment of your outstanding balance in any 12-month period without charging you any money. So if you can make overpayments monthly, then absolutely do that. They calculate the interest on a daily basis usually. So then it's just going to reflect and bring down your mortgage term So if you have a more flexible mortgage, it may well be that you don't have any early repayment charges, in which case you can just make overpayments as you wish. But if you are tied in, it's that 10% of the outstanding balance in any 12-month period. That's the key to it, really.
Okay.
What we are finding at the moment is where some people are coming near to the end of their fixed rate and are worried about rates going up, as we're now working out, is it worth you paying the early repayment charge that you've got left on your remaining mortgage to be able to remortgage now to secure that, low fixed rate for the next 5 years or so? Because, in however many months' time when their rate is due to end, rates may have gone up by then. So we're having a lot more clients call us now to say, let's just review this. Is it worth me paying that charge to secure a new rate now?
Yeah.
Which sometimes it is, sometimes it isn't.
And currently, I suppose it is like the time to get a mortgage. I mean, to do any of that sort of stuff because of all the inflation, and it's just going to go more expensive, I reckon. I suppose rates are going to be more expensive soon.
The thing is, we never know what's going to happen. No one's got a crystal ball. If we did, we'd be
very rich
mortgage brokers. But no one does have a crystal ball, so we can plan ahead and we can kind of try and assess the risk of the rates going up, but we never know. And ultimately it's then just down to the client. Do you want to take the hit and pay a fee to leave your current mortgage to secure a longer fixed rate at a reasonable rate, rather than chance it and it could go up?
Okay, great. And why is payment protection and life insurance important for second-time buyers?
I think it's important for anyone buying a house, to be honest.
Stupid question. Very broad anyway.
No, I think there's so many things that can happen that are outside of our control. We work hard to buy houses, Normally we're saving hard. It's our family home, and it's something that we've worked extremely hard for to get. And then if something was to happen that was just out of your control, if you were to get sick or if someone was to pass away, the last thing you want to do then is to have to sell your house and the security around you. So by having those policies really in place, it's just protecting yourself against the worst that could happen.
Yeah, definitely. Okay, and should second-time buyers write a will as a consequence of this?
Oh, I absolutely believe that everybody should write a will. I think there's so many people we speak to say wait until I've got something because I've got nothing to leave anyone. There's always something means something sentimental to you, even if it's not of monetary value. But certainly, your house. If you've got a cat, I have 3.
Oh yeah, very precious.
But children especially. If you don't have a will and something happens to both parents, then there's nothing that's written down to say who you want to be the legal guardian of your child, and then the state decide, and that's just, you never know what's going to happen there. Exactly. So absolutely, a will is very important to ensure you have something in place.
Yeah, definitely. Well, thank you guys so much for coming on today. It's been great to have you on,
having us.
And if for all you guys at home, if you'd like to share, subscribe, and we'll see you in the next episode.